All right, we got a bunch of people in here, starting the stream a little early by like a minute. Appreciate everyone that's been here, waiting in for the video to start. If it's your first time here, hit subscribe. If you are not yet a member of our free options trading group, the link is below. If you've been here since day one or even last week, I definitely appreciate the support. Thank you so much for subscribing. Thanks so much for watching. Thanks so much for hanging out with me. It definitely means a lot. The UVH fam is, incredible. Incredible people in here. We all want to learn. We all want to trade. We all want to just do our best and evolve into the best traders that we can be. If you're here right now, say what up. What's going on? Glad you're here. Got a bunch of people in here. I see Joe, Linda, FC, Kit, JC, Jeff, Greg. Let's see who else is in here. Peter, Tobin, Carmine. Who else is in here? What's going on? Smart Trader, Keith, William. Man, we got the whole fam here today. Got the whole fam coming in. Derek, what's going on? If you want to get notifications for when we go live, hit the bell button. We go live 30 minutes after market close, or we posted a video. If you made money today, I think you guys know the rest. Comment got paid. If you lost money today, comment learned a lesson. Diz, what's up, man? What's going on? Hope you made some money today. Glad you're here. Glad you're here watching. I definitely appreciate everyone that's here watching me. You guys are great. Carmine got paid. William learned a lesson. I got paid this week. Linda played defense, got paid. Defense. Baron, what's going on? FC, you gotta put your stocks into a different account and have a different account for your options so it doesn't get all twisted. Baron not paid. Well, Baron, did you learn a lesson at least? Did you learn from your mistakes? It's okay to lose as long as you learn. I know that kind of sounds cheesy, but like it's true. Aisha learned a lesson. All right, FC got paid on options. Smart Trader 10 out of 11. Nice. It's a good track record right there. Joe, I'm waiting on trades that offer 2-week holds. All right, Joe's in a waiting period. He stalled out. His lotto plays are sitting there. He's waiting to get paid. I'm just messing with you, man. True, that's Tasty Works. I just can't help but add them together during the week. FC Tasty Works makes it easy to open another account and move things around. Just so you know, you could easily when you're in the platform, it's easy to switch accounts too. Where's your Santa hat? So people that really know me very well, you guys are starting to get to know me. How do I say this nicely? I don't want to take it in the wrong way, but Christmas is not my favorite holiday. But I will wear the Santa hat around Christmas. For me right now, it's not considered Christmas. Richard, what's up? What's tonight? Nice to see you back in here, man. Yeah, FC on the homepage. We're going to get into it. When you sign in, let me get this for you. Just want to make sure. So, when you sign in to Tastyworks, all you have to do is hit open another account and it'll open it up for you. And then when you're logged into your platform, you can easily switch between accounts if you want to. Just go log into Tastyworks on their website and click on open another account, and you can easily switch things around. Excuse me. Have a lot of holding pattern for the next 2 weeks as well. Derek. Can be a tough time of the year for sure. Jeff's all about nice summer holiday. 4th of July. I have too many calls for the way the market's going. Got to balance it out, man. Got to balance it out. Got to balance out your bullish positions. Like, look at your deltas, you know. But we'll get into that. You know, I didn't live stream yesterday, so I definitely appreciate everyone that watched the video yesterday, supported the video. Hope that was useful or helpful. Been trying to make some content that you guys enjoy if I don't live stream. Obviously, I do prefer live streaming, but sometimes you just can't. Let's see here. Okay. Richard, $20. Thank you, man. Richard, you support every stream, man. I don't know how to thank you, how to repay you. Just thank you, man. Thanks, Kat. President Trump just texted me. Linda, you just ousted yourself as a donor. Just kidding. It's okay. FedEx killed us today. All right, so let's get into this. Man, Richard, thank you again, man. Really made my day. Thank you. So let's get into this. I didn't live stream yesterday, and let's go through a couple of my trades. Yesterday made pretty good money. Was up about $300 per account. Yesterday and Tuesday I made the book on Monday. Monday I believe I was red. So Monday I was red. Tuesday we were in the green, and yesterday we were in the green. Today we were in the green. Today I'm up $91.50 per account. Yeah, what is going on here with the? Anyways, can you guys see me okay? Everything's loading okay on your end. I just want to make sure. If you have multiple accounts on the same platform, does each account get 3-day trades? I believe so, but you should double check with the broker. I don't know. Just don't take my advice on that. I think so. Per account, you usually get 3-day trades, but you should take that up with the broker just to make sure. Couldn't pass up a Space Force T-shirt. So yeah, we're up $91 today. Okay, everyone sees me fine. All right, must be some weird stuff going on my end, man. YouTube has been really weird, and last week we had some trouble going on. How much buying power do you use this week to make that 1K? It's hard to say because I rotate a lot, so I would say I would deploy $500 to $1,000 per account per time. So I guess I would say that I'm at like $4,000. So $4,000 deployed, made $2,000 this week. So I made on average 50%. I don't like to go by dollars. I more like to go by percentage because, you know, some people, you know, I was talking to somebody today, like they were up 600% on the small account, which at the end of the day, like it doesn't matter. Like you're up 600%, just be thankful you're up 600%. You beat the market by more than well enough. I mean, like you crushed it, man. You should be thankful. But as you can see, so we'll talk about let's talk about before we get into the trades. I want to talk about the S&Ps, where they're at right now. You know, the S&Ps right now, I was telling people, let me actually, the S&Ps right now, I was telling people, like, we're in a very dangerous spot, especially like if you're long, because, you know, right now we're in this pattern right here where we're kind of bouncing back and forth. So 28, we talked about this on Tuesday. So 28.15 down to 2600, back up to 28.15, all the way back down to 26.25, up to 2800. Now we're back down to 26.33. So right now we're like we're pinging back and forth. You know, right now we don't have a clear direction, even though it looks bearish. You know, but if you're just looking at right here over the last couple months, right where we're at right now, we're still just pinging between. We have not hit February lows. February low was 25.32. We've been staying above 2600, which is very important. You know, if you're bullish, being above 2600, I'm you know, below. If we're holding below 2600, I mean, we're going to be in big trouble. So right now, you know, like I said, right now we're holding this pattern right here, and right now we're down back in here. So, you know, today was, like, for me, it wasn't a day, like, I barely got an SPX. I had an SPX Iron Condor on, which I'll review. I barely got out of a live due to the volatility and the swings. I got out profitable by about $50, but it was a lot of work, and at the end of the day, I decided to just kind of chill. You know, we're sitting back down here at the lows. You know, I'll reevaluate Monday and kind of re-enter and see where we're at. But, you know, SPX yesterday. Let's go to SPX. You know, this trade that I did. So yesterday when we had the major down day, you know, we'll zoom in here on SPX. The major down day, everything was super expensive. I couldn't bring myself to buy anything yesterday. I couldn't buy premium. So then, you know, I had the wise idea of shorting premium, which then turned against me. So I started a short premium. And if you guys haven't noticed, I haven't shorted a lot of premium in this market, mainly because it hasn't paid off for me, and it's been, shorting premium has been very stressful for me, as in like yesterday. Billy, what's going on? If you're just arriving, it's your first time here, say what up. So yesterday we gapped down quite a bit, and options pricing was through the roof. Everything was expensive. We were going into Friday, and one of my biggest concerns on Friday was that they're just going to burn premium up, and we're just going to you know, be flat today. That obviously did not happen. That did not happen. So what I did was I scaled in an Iron Condor one leg at a time. I did the put side first, then I did the call side when it came up a little bit, and then I had to play some defense on it. So at 11:08 yesterday, right in here when it started to bounce, when we had this leg up, I added the put side. I bought the 2600. I shorted the 2600. So let's kind of construct this for you, just so you can get an idea of what happened here. So I had the I was short 2600, and I had the I was long 25.95 here, and that was good. I got $1 credit for it. That was good. You know, I wasn't shooting for a big trade. I was looking for like a wide Iron Condor. And then when it came up a little bit, about 30 minutes later, we kind of went through the roof. You know, when we came up 30 minutes later, we were up to here. I definitely shouldn't have done this. I probably should have let it ride a little bit longer, but I really didn't think we were going to close the gap. But, you know, because I put the trade on, we definitely closed the gap here. So right in here, 30 minutes later, when we got up to like 26.60, I then added the calls. So I shorted some calls here. I shorted the 26.95, 2700. So I had the 26.95, 2700, which obviously now are worthless. They're worthless. So when I did that, you know, after I did that, it came down a little bit, and I was hoping it would kind of settle in maybe around like 26.40 and kind of just hang out the rest of the day. But that's not what happened. That's not what happened at all. We came all the way back up to 2,700, and I was being tested right here on the call on the call side. So I was thinking to myself, well, we're gonna have to defend this position. You know, obviously now it came back down. We would have made max profit, but at the time you don't know that. You think that we had such a strong push here the rest of the day. This could easily open up 20 points higher, 30 points higher, like easily. So what I did, I then closed out because I could only make like 15 cents left. I closed this out. I could only make 15 cents. So out of the dollar I got, I had to pay 15 cents. So I made $85 on the put. So I rolled up the puts to be more aggressive. I rolled them up. So I sold them off for $85 profit. I then rolled them up in a super aggressive manner, 26.85, 26.80. So then I moved it all the way up to here, just like this. And I received $1.70 credit. And the reason why I did this is because I wanted to get more credit. I needed more credit for my trade. And with this trade, worst case scenario, I was probably going to lose like 150 or so after taking in that credit. But if we had a flat open, which I didn't think we were going to have, if we had a flat open, I could maybe get out of this live, and I was actually able to get out of this just like perfectly. So I put it on for $1.70 credit. So now I have a super tight iron condor after taking off the credit, had a super tight iron condor. And I was looking for like a 26.90 open because that's kind of my sweet spot right here, 26.90. And we opened right at like 26.92, 26.91, right around here. It was kind of going up and down. So at open, I was then able to close off the call side when it was down at like 26.90. I did take a loss on it. I did take a loss on that. So I took a $125 loss on it, but I got 100. So I put for 110 coin. Sorry, I took a $115 loss on it. So I got 110 credit, sold it, bought it back for 225 debit, and at this point, I had the put side left. So I had sold off the calls, lost $115, but in reality, I made $85, so I got some of that money back. I then was able to sell. This kind of ripped up a little bit higher, so then I was able to sell off my put side. This is like just worked out perfectly. I sold off my put side, so I originally got a $1.70 credit. I then sold it. I bought it back for a 90 cent debit. So in all, I made $50 on this trade when it was ending up looking like a full loser. However, if I did nothing, it looks like I would have had max profit on both legs. I mean, I would have had max profit on the bottom, would have had max profit on the top. But I mean, this kind of chart, you never thought this kind of chart would happen. So, but that's how I played defense on my SPX Iron Condor. You know, so just wanted to show you guys a little bit of a credit situation, Iron Condor defense trade, and how I rolled that around to kind of turn it around to be a winner, because it was looking kind of dangerous. Could have lost 300, but instead we lost. I mean, we made $50, so not a huge trade, but we survived. Excellent. What's going on, man? Glad you're here. Today, also what I did was IBM. So IBM was coming down pretty aggressively, and I still have December 135 calls on IBM. So I have December 21st. So December 21st calls on IBM. You know, at the time, it was looking like it wanted to kind of level out here and push up. Obviously, today we ended up lower. Nick, you were scolding me about. Sounds like you were damage control. Joe, I was not lotto playing SPX. I was selling credit spreads for a reasonable amount. I was defending my position. That's how you defend a position. I don't just buy cheap options and hope they hit the targets. Anyways, so IBM was coming down. I already had a position. Kind of walk you through here. So let me minimize here. So I originally had a position. I bought the 135 calls. I bought 2 of them for 57 cents. I then bought 2 more for 35 cents, and then today I bought more for 9 cents and 6 cents because now my average is 15 cents. You know what I'm looking for on this trade isn't to really make money. I'm currently down $150 on this trade. My goal is to just get out of this profitably. You know, if you're looking at these calls here, you can see that, you know, they've pretty much been sitting at the bottom, really haven't been losing any more money. I mean, yeah, I did hit a low of 4 cents today, popped back up to 9 cents. So we're pretty much just sitting here. You know, yesterday did hit 25 cents. So really, I just needed to be above 15 cents, which I think could happen if we get some bullish momentum. But at the same time, that will probably be the last time I try to defend this position. This will be the last time I defend this position. If not, we'll just let it ride out and see what happens. But if we do, like if you're looking at the S&Ps, if this does bounce from here, I could definitely get out of this. Like if the market does bounce from here, just a little bit, I just need a little bounce and I can get out of this alive. But that's why I put that trade on. But that was really the only trade I put on other than USO. And USO, we'll walk through a couple days, last 2 days. So USO, I know a lot of people here trade USO, and I cut my puts yesterday. I had 6 puts. I got 11 cents for them. I lost $50, which is not a big deal. But it then, we gapped up this morning on the OPEC news. So I would have had a max loser, so I'm glad I made back my $50. I took in $50. But today I was kind of concerned. I don't like to buy stocks when we're like just gapping up. So it gapped up 4% and literally was just sitting here. Like we gapped up 4% and literally was just sitting here. So then when we went down, I then put a position on. So if you look at USO, I bought the, I think I got a better price on Thinkorswim. I got 25 cents here. I think I got 24 cents on Thinkorswim. Yeah, I got 24 cents. I got 24 cents on here. So I closed that out because I was not sure. I mean, I thought that, they're only going to let oil go down for so much, for so long. Yes, oil could come down to $20 a barrel, but it's been kind of, people have been hinting at that they don't want to do that. They don't want oil to go lower. Trump wants oil to go lower. He doesn't want it to go higher, but who knows? Like, people don't care what Trump thinks for the most part. So I bought these right here. They're still sitting at like 24, 25, 23 cents. So I bought the January 18th, 2019. So I got 42 days on these guys, to give it enough time. Really what I was looking at yesterday, yesterday it was at like 56 cents. This was on, Monday was at like 56 cents. It spiked up to 56 cents. We're now sitting down at 25 cents. Low for the week is 20 cents on these calls. So I hit 24, 25 cents on average. Came down really nice today. They were sitting at 40 cents at open. Came down really nice when oil was going down. You could see how this pricing correlates with how the stock moved. And as you can see, as you can see at open, you know, this is why you got to be careful about buying at open. It's better to sell at open because right at open, look, we gapped up. It went up to 40 cents. It did nothing. So as soon as it did nothing, it deflated 10 cents. Just did nothing. You know, chilled. And then we broke to the downside, and that's when I put my position on right down in here, 25, 24 cents right down in here when we broke down. So, yeah, Joe, I'm January 18th on these, 42 days out. So giving myself time. They were only 25 cents. You know, we're trading small. I only did 3 contracts per account. So we're trading small and seeing where it goes. I mean, if it gets rejected, we'll defend the position. But that's really where we're at right now. Like, the people are trying to make oil go higher. So we'll see what happens here. In terms of yesterday, Microsoft was my big winner yesterday. Made about $260 yesterday per account on Microsoft. So got out of oil alive. We're still in it. So we'll see if we can get back up here to like the 1150s or so. We'll cut it loose. We're not looking for 400% returns here. Just looking for like a 50%, 100% winner on USO. So. How'd you guys do? Any thoughts? Any stocks you want to look at? We're about 26 minutes in. I don't want it to be all about me. I didn't stream yesterday, so I just wanted to cover some of that. And there's some background story to these executions here. One thing I want to talk about, CVS. So I told you guys this on Tuesday. Like, if I ever want to trade CVS again, don't let me. One thing, it's low volume. So I probably shouldn't have traded in the first place, and this is kind of what happened here. CVS literally for a whole week was bouncing between 79 and 81 for a whole week, and ate my premiums. I had the 82 calls and 78 puts. Was kind of bouncing around here until yesterday. We finally broke to the downside. As you can see, we have some wicked candles here yesterday on CVS. I then got 50% of my money back. It was a max loser. I got 50% of my money back. So I decided to cut it loose because, you know, typically what it's been doing around 78, 77 area, it's been bouncing back up and I've been losing money. So as soon as it got back down to that level, I cut it. But as you can see, this could have been an easy 400% return. Instead, I'm going to lose, I got 95 cents on this and I still have the call. So 95 cents minus 83. I'm going to lose about $50 on this trade. So, you know, we did break down nice, had some nice movement the last 2 days, but just ate my premiums. Terrible timing to put a strangle on. Or maybe it was good timing. I just didn't give it enough time, you know. Maybe I just didn't give it enough time, but it's a low volume stock, it's a slow mover. Probably will not be trading it again, but OIH. Joe, I'm already up on USO on the puts I bought. So the calls aren't to defend the puts. Me defending the puts was cutting off at 50% to retain my gains on USO that I've made on these down moves. I've made a lot more than $50 on USO. OIH. See here. I bought USO calls mainly because I thought that oil was going to bounce from here. That's the only reason. That's the only reason why I did it. So we got some good volume. We got some good volume on this. Decent volume. Only on some strikes though, so you just got to be careful. But yeah, I mean, right now we're looking at, you know, you're at the 52-week lows here. You just got to be careful. Let's see what the 2-year looks like. This is the lowest it's been in 2 years. Let's go to 3 years. What are we at? What is this? Lowest it's been in 3 years. Yeah. Yeah, this could continue to just keep falling. I mean, it looks like a good play. But you guys got to be careful with it if it decides to rip up, because if it rips up, it's gonna put the hurt on shorts that have been making some massive cash on this thing in the last 3 years. Billy AEM. JC, I was seeing calls on OI. I mean, I don't think you want to go long yet. I mean, this downtrend is real. This downtrend is real. AEM. Okay, some decent volume on AEM as well. Yeah, for me to go long, would have to break above like 41, 42. But I mean, this was some nice. I mean, if you didn't catch these double bottoms here, you know, now you gotta wait. You gotta wait to see if this gets rejected or what the new trend is gonna be. It broke the trend. It broke it right here above 38. We broke it above. Hit these double bottoms here, triple bottom down here, and would have been a good play if you played the bounce back in here. Would have been a good play from here to here, or when it came back down to 34 and you played it. But right now, for me, it wouldn't be a play. Billy, do you not use studies when you trade? What do you mean? You mean I use the implied volatility, but that's about it. I don't use SMA. I don't use MA. I try not. So I get a lot of flack from this from people like, you know, you're not trading with RSI. You're not trading with blah blah blah. You're not trading with. At the end of the day, what works best for me as a trader is to keep it simple. Keep my mind free. Yes, I may pull out. I may pull out those indicators from time to time if I really maybe not sure or really maybe confused. But if I'm really confused about a position, if I'm really confused about a stock, I'm not going to trade it. I'm not going to put my own money. I'm not going to put my own money at risk if I don't know, and if the indicators are wrong a lot of times too. So what I like to my favorite way to trade is just basic support and resistance, man. And option pricing. If option pricing is too expensive like it was yesterday, I sold some premium. And I did regret it, but I'm glad I came out on top. I mean, I haven't sold premium in a while, and it was a good exercise on defending a position, which I haven't defended a credit spread in a while. And what's going on? It was a good exercise to defend a credit spread, and it's also nice to know that, hey, I still got this. I'm still good. My mind is still working on defending these credit spreads. 2017, I did a lot of credit spreads. This year, I'm not really doing much, which is kind of weird because where a lot of people teach is when implied volatility is high, you sell premium. When it's low, you buy a premium. However, last year, 2017, I sold a lot of premium. This year, I'm buying a lot of premium. So my strategy is very flip-flop. Nick, Tutnedum, I bought the 12 strike calls for January 18th for 25 cents. Been trying to use that on my first plan of action. Banks dangerous. Yeah. I've been looking at GS because, I mean, GS is one of my favorite bank stocks to trade, but I've definitely missed out on this move because I'm not willing to pay the premiums that GS is charging. Because I find that when I pay for more, or I find that on GS, like if it gets stuck and it slows down, it really gets stuck. Right now you could definitely make some money on GS if you're willing to pay a lot of money. But I noticed that when I pay for, like, if it's over $2 a debit over $2, I tend to have a hard time making money in GS. JC, that is correct. Billy trying to use that on my first plan of action. How many got a string on Apple today? All I did today. Apple. Let's talk about Apple. Apple's very scary as well. I mean, any stock right now is being tested. You know, 2017 stocks went up so much. probably too hot, and now we have an undeniable bearish trend since hitting highs. And like, I don't want to be the bubble guy. I don't want to be the tinfoil hat guy. But when you go up too fast, too quickly, and you're going up by a lot of money, you know, you had to know that something like this was going to happen. Like everybody in 2017, I was talking about people that have 401ks, and people are like, oh, I'm so happy that, oh yeah, my portfolio is up so much. It's so great. Yes. Just realize that the S&Ps are up above 30% for the year. That's not normal. That's not normal trading. Most tech stocks increased over 100% last year. Stocks that were terrible went up last year. That's how you know that, like, things aren't good. Like, you just can't go up for no reason. There was no reason. There was no pullback, and it went on for a very, very, very long time, way longer than I would have thought. And now we're starting to get to a point where people are questioning, hey, maybe things were overvalued. Maybe they were right. Maybe we went up too quick. I mean, if you look at the 2-year chart, let's say on Apple, I mean, we're still way above where we started 2 years ago. I mean, 2 years ago it was 109. Now it's 168. I mean, it hit 233. And you know, probably a reasonable level for Apple was 120, 130. You know, something like that. But it went from 100 to 233, and now we're feeling the pains. Like, this is, you know, it's rotation. It's market rotation right now. I'm not a bear. I'm not a bull. I mean, I would prefer things to go up. I'm not a perma bear. I'm not a perma bull. I mean, I like when you buy stocks. I mean, I'm bullish on America. I think that America in the long run is, you know, we've obviously are the leader in the free world in terms of a free marketplace. I mean, we're the richest country in the world. I mean, that's not going to change anytime soon. But at the same time, stocks can't go up forever, and stocks are not going to go down for forever. Stocks will not go down for forever. Like Apple going to zero. I mean, if Apple goes to zero, you know, we're no longer a country, basically. If Apple goes to zero, we're going to have bigger problems. If the S&Ps go to zero, we're going to have bigger problems than what we're dealing with now. We're going to be wondering where's shelter and food, not like, you know. So if there's no more stock market, we're going to have a lot bigger problems than what we're facing now. So, you know, long-term shareholders, I mean, definitely reevaluate. You went up, you know, congrats. You made over 100% on most tech stocks last year. Congrats. If you're holding, you know, congrats. But if you look back into like the 99, 2000 area, there was that one last push, kind of like Bitcoin. There was that one final push that just pushed it over the edge, and that was it. And now, you know, it took, if you look at Microsoft, over the last 20 years, the last time it was this high, well, the last time, so it broke, when did it break? So it broke 36 or something, 50s back in 2016. So when I was breaking that, I mean, it's hard to show you here. So it broke 60. Last time it was 60. It was 19. Look, final push. Final push here, 1999. Stock hit 60. In 1999, it stayed at the bottom for years, and then it didn't get back to 60 until, what year is this? It didn't get back to 60 until 2017. So almost 20 years, 18 years, it took Microsoft to go from 60 all the way back to 60, and now, I mean, just to give you some context on what that looked like, you know, it took Microsoft, 20 years. So people that are selling stocks right now, you know, people that were bag holding Microsoft at 60, it took them 18 years to get back to break even. Like, that's why you got to be careful about markets that just rip through. Like, you know, you just got to, yeah, Microsoft, larger market cap than Apple right now. Correct. But, I mean, that's, like, you just got to be careful. So, I'm not bearish by any means, but you got to understand what is reasonable. Can always go back to bad fruit company like 15 years ago. But what was I kind of went on a rant there. Sorry. What was the actual question on Apple? The original question, Apple. Apple, like I said, I think is going to come down a little bit lower. We're definitely in danger zone. I mean, if it comes down to like the 140, 150 area, you know, definitely could be a bounce. But right now, Apple's having a lot of bad press, a lot of bad publicity. They're having, you know, slowing iPhone numbers. People aren't, you know, Apple's no longer putting individual iPhone sales into their numbers. They're just including it with everything else. So people are worried. People are worried right now. So I think that, you know, we're definitely, the downtrend's not, you know, the downtrend is still intact. You know, once we couldn't bounce around 180, I mean, we're in trouble here. Here, Turtle Beach. I love my Turtle Beaches. This doesn't look very interesting to me just because, you know, it's been in the same range it's been the same price since April. You know, so it doesn't look that interesting to me. It looks like we had a reverse split down in here. Let's see their earnings. Looks like they gapped down in earnings here. You know, they went up on these earnings, but right now I think Turtle Beach or here is not. There you need a catalyst to go up or down. SQQQ, short Qs. The question is, I don't normally trade these. Do you guys trade these? Or like, what's the benefit for you to trade this versus just buying, like, you know, puts on Qs? You know, we got, you know, this looks very like I said, we have to break the range, same as like for the Qs. You know, we still have to break that. Same with the S&Ps. We're stuck here. You know, we're still in bounce territory here. So, you know, that's what I'd be if you're looking at SQQ, you know, you're at the top of the range here. If we can break above the range, which is going to be meaning lower Qs, you know, we got to break above 17, 18 to go higher. Right now, we're nearing the top of the range here, so I would say next week is going to be very telling. My SPY credit spread ended out of the money today, but I sold with max loss because I panicked in the morning. Yeah, Hamed. So if you're looking at so we were looking at SPY earlier today. I'm sorry, SPX, but SPY is the same. This is going to be the same chart basically. You know, right now in this market, we're going to leave. This type of market is going to magnify your mistakes. It's also, like I've been telling people, you're definitely going to leave money on the table. Like, don't feel bad. You're definitely going to leave money on the table because we're in a market right now where the move is exceeding what we mentally expect. And, you know, for it to go down yesterday and then recover fully, killing both calls and puts flat for the day, you know, you can't plan for that. The what you can do is just trade safe, and if that's the right decision for your account at the time, it's best to stay disciplined, because normal markets aren't going to be like this, aren't going to be this violent. So normal markets aren't going to be like this. So it's better to develop the discipline to take the losses. And Hamed, was it expiring today? I think so, right? So you did the right decision by staying disciplined, closing that out, so you're not getting assigned the stock or exercise the stock. You know, you don't want to be assigned the stock when you're short options. So, you know, you really want to, in this type of scenario, you want to keep your disciplines, because when the market isn't like this, those disciplines are going to pay you. Those disciplines are going to keep you safe. Right now, it's screwing with everybody's minds, it's screwing with everybody's emotions, and you're necessarily, you could easily be a sloppy trader. Like people are going to come out of this volatility movement, this volatility area, and they're going to let things go longer than they should and then lose. They're going to say, well, just because I could have had it happened to me. I showed you like 4 times I could have made more money. You know, they're going to leave. Instead of letting it ride like in this, like like people will regret taking profits on this, even though they made a lot of money. They're like, well, instead of making 200%, I could have made 1,000% if it went up when it went up to here. And in a normal market, they're going to hold that. And then what's going to happen in a normal market is it's going to go down. They're going to be profitable. They're going to be up 100%, 200%, and then it's actually going to come down on them, and they're going to not be disciplined in taking profits. In a normal market, you have to be very disciplined in taking profits, because those profits are taken away. The greed factor right now is real, and it's going to mess with you. So it's best in this market. It's very easy to be greedy. It's very like yesterday on the call side, bulls wanted to be fed, bears wanted to be fed. They just let it go. And you know, there's a lot of people that bought calls on this that were very greedy, and then they're like, well, I guarantee you there's a lot of people that waited this whole move and they got super greedy. They said, well, there's no way the market can go down again after a move like this, and then they lost all their money. So in this type of market, you got to be careful and stick to your disciplines. You just got to stick to your disciplines, because it's going to mess with you emotionally. It's going to mess with you. But if you keep those same disciplines when the markets are volatile versus when they're flat versus when we don't have these major moves, it's going to save you in the long run. Like, just because we had a couple of days of violence doesn't mean it's going to continue. Days like this will not continue. It won't be the long run. Maybe we'll have a month of this, but in the span of your trading career, if you're thinking about the span of your trading career, you'll be more profitable being disciplined than you are being sloppy and messy and holding out for profits and doing that. You'll make more consistent gains, like from the day that you start trading to the day that you stop trading. 40 years from now, 50 years from now, 80 years from now, whatever it is. However long you want to trade for, disciplines for the long run will pay out. Small profits consistently will pay out. Don't try to get to 1,000%. Don't try to get to 2,000%. Take 100%, take 50%, take 40%, and get out of there. Redeploy capital, take profits, redeploy capital, take profits, redeploy capital. That's all you can do. Made more than I lost this week on SPY, but today sucked. Greg, I lost $1,000 last week. It was my first week back. Came back this week, I made $2,000 back. So, there's going to be ups and downs like this. There's going to be ups and downs. You're not going to see, and anybody that says they're not losing in this market or hasn't had a losing trade is lying to you. Everyone has losing trades in this type of market. Everybody. There's no way you could be so good that you time the market perfectly on every stock that you do, because right now we're in uncharted territory and nobody knows if the sky is falling or we're going to rip back up to the moon. Nobody knows. I definitely didn't like, I said just having call in place for protection was cool because I got the leg. Told myself, wish I added more. On the other hand, I'd like to see if the market's open lower just to find out if GE is really going to hit my number. Joe, I hope GE hits your number. GE's got sliced today. Discipline. I have to say, discipline's the only way. Keeping your emotions in check, discipline, and crypto slice, what's going on. And if you're getting very emotional, you're probably over deployed in capital. any position that I have right now, any position that I deploy, I can let it go to zero and I can bounce back from that. You know, even though I had a losing week of $1,000 last week, I was not over deployed in my capital where I couldn't bounce back from that. And if I over deployed my capital trying to throw good money away, I would have never made double my money this week. You know, I made my loss back from last week, and I made $1,000 more. So I'm very happy about that. But if you're losing like last week, I lost every day last week except for one day, and that's when you're not seeing the market correctly. That's why you needed to take a. That's why I needed to take a break and realign. Come back this week, clear mind, just take it easy, take it slow, and it's not about, in this type of market, it's not about having a lot of positions. It's having one good position, two good positions that'll pay you decent. You know, if you have all these positions that are all going in different directions, you're going to get in trouble. Yeah, I did make money on Tesla yesterday as well. We can talk about Tesla real quick. Tesla has gone from 338 to 380, back down to 359, all in a 5-day period, which is just insane. I'll cover my Tesla trade here. So Tesla, I actually shorted a call spread. I had the 360. I was short the 362.50 call and the 365. And I bought the 365 call for next week to kind of give you a visual of that. I had the December 14th, 362.50, 365. So I had it right. I had it right here. I originally got $1.28 credit. Right now it's going for $1.15 credit. I got $1.28 credit. I sold it for $1.04. And the reason why I sold it is yesterday, you know, Tesla, after I put the position on it, wasn't going back down. We gapped down yesterday on Tesla. It came all the way down here. And I took the opportunity to take that trade off. I only made $24 per account. I mean, that's $100. I mean, I'm not complaining. But I didn't make 50%. I didn't make that much on it. But I'm glad I stuck to my guts and stuck to my discipline on Tesla because it ripped back up. And then today it ripped back up again. I mean, even higher, which, you know, went up to almost 380 before tumbling back down. So I was glad that I was out of that trade. I mean, I closed it right out at open, 8:35 yesterday morning. So 5 minutes into open. So I held it on. I held on to Tesla for 2 days, and it really wasn't going. It kept going up even though the market was going down. It was staying in that position. And so on the major down day, when it gapped down lower, like to the lower 350s, I took it off. And that's why I took that trade off, you know, and then I'm glad I did because then we ripped back up and then we went up to 380. I mean, we still would have been profitable at this point, but you have to, when a position is like violent like this and it's going against you, and then you're profitable by a little amount, it's not worth the risk to keep on. It's better to take the small profit than risk it. Like if this went up to 380, then to 390 and 400, I could have got out with a small profit like I did. Or it could have ran to 400, and I would have had to been max loss and close it out, and I would have been not happy about it, right? So when a position like a credit spread is not going the way that you want, or any position not going the way that you want, you know, you have to determine: do you still believe in the position? Do you think that that position is still going to work out? You know, normally when a position, like when I put this Tesla position on. And when the position keeps going against me, then it goes my way. Then it keeps going against me, then it goes my way a little bit. Eventually, when it knocks in that door enough time, then it goes against you. When it goes in that door enough times when it goes against you, eventually it's going to break through, which it did right here. Went up to 380. It knocked in that door again. It broke through, would have been against my position. So it's kind of a hint. So when you're trading, when it keeps knocking on that door to go against you, it's probably good to get out with a small profit or a small loss, and then reevaluate. Would have been better for me to put another position on today. When it came back up to 380, I probably should have put another position on, but I was kind of just not sure which way the market wanted to go. And Tesla's been a kind of a stressful stock to trade. So I haven't really been trading it. I haven't been really trading it. Nick needs to take into account that he lost big on Tesla. I don't know, Joe. I don't know what you're talking about. I don't have. These are the only orders I have for Tesla. I don't have anything at 335. I don't know. I mean, if you're talking about past positions that we've closed out for profits or losses, I mean, those trades are long gone. Like, they have no impact on my portfolio right now. Hamed, I'm going to rewatch this and make some notes. Yeah, you guys are getting me fired up a little bit here. I'm getting a little fired up right now. What are your thoughts on Amazon? Brenda, if it's your first time here, say what up. I try to meet everybody that is watching. And if you're not yet a member of our option trading group, click the link below. We can connect there, connect on Facebook. But Amazon actually is one of the better looking stocks out right now. It's not sitting at the lows it was on the last crash. Obviously now at 1800, we're getting some rejection levels up here starting to be built. It's still range bound. So I would just be careful about it. I mean, I would be more comfortable shorting it around 1800. Right now it's in the middle of the range. So for me, not much of a trade here. I actually want to see Amazon, if we're going to break lower to 1400. You know, I don't know. Right now it's in the middle of the range, and I typically don't like to trade stocks that are in the middle of the range. Joe, I'm not any trades you guys can see in here. I don't have any, you know, this is it, man. This is all I have. These are all my trades for today and yesterday. These are all the trades for Tesla. This is it. These are all the trades that I have. Guy, what's going on? Guy Jenkins, nice to see you. You guys picked a fun day to be here for your first time. Got me all fired up. Joe, I never had 335 puts. If you look at my positions here, we can go back even more if you want. We can go back 30 days. 30 days I had, on November 12th, I did have the 345. We can go back more. You know, these are all my trades the last 60 days on Tesla. I never had 335. I had 320, 305, 315, 345, 360, 365. There's no 335 here, man. Yeah, if this video is valuable to you guys, hit the like button. I definitely appreciate you. S&B, what's going on? Tobin, how low do you think Bitcoin will go? That's a loaded question, man. I don't know. Like, people didn't think it would ever crash, and here we are. Could go as low as $100. I mean, it's gone from 20,000, now it's down to the low 3,000. So, you know, it could go to 100. It could go to 500. It could go back up to 10,000. It just depends. It really depends if people find value in it. And right now, if you're a trader in the stock market and you're making the kind of money that we're making right now in our group, and you know we're making money us versus herd, there's no reason to trade Bitcoin. You know, if we can make 100% gains on options, 50% gains, there's no reason to trade Bitcoin. Crystal Slice, Amazon's my cash cow. Nice, yeah. Last year, Amazon was my cash cow. This year, not so much. So I don't trade it as much, but I do trade it from time to time. But I don't trade it. Like this year, I've definitely scaled back. Yep, Joe. This is all my Tesla trades the last 60 days, man. Brenda, I would love to join the group. I don't have a Facebook. Sorry to hear. Yeah, I mean, when I launched the Facebook group, I didn't intend for it to take off like it has. I mean, we're almost at 800 members right now in the Facebook group. And the reason why I launched the Facebook group is because I wanted an easy way for people to connect. And most people have a Facebook. So that's why I chose Facebook. And Facebook had the infrastructure that I was looking for. And that's why I chose Facebook. Unfortunately, I understand that some people don't have Facebook. There's a lot of people here that don't have Facebook, but I was playing the odds. I was playing the numbers. Yeah, if it's your first time here, say what up. Definitely want to meet you. Anything else? We're at an hour right now. Definitely thank everyone for rocking with me. What else do you guys want to think? What do you discuss on Instagram? Instagram, I've been doing some live streams in the morning. You can hit me up. Link is below for Instagram as well. Oh, Boeing, Derek. Boeing is unfortunately tied up in the tariff-China war. However, you know, it's having some volatility. And this chart is all over the place. But if you look at it, it's still in the middle of the range. You know, this chart's a lot like Tesla, where it's getting to be predictable, where, you know, 370 areas rejection and then 300 area support, or 310 area even. So right now, I would look for it to revisit 310, the 310 area, before going long or making a trade on it. Yeah, FC actually, Amazon was my #1 performer last year. I was selling just puts. Matthew, welcome. Glad you're here. Yeah, last year I sold a lot of premium. This year we're making money on buying premium. It's us versus herd, I guess. Got to do doing the opposite of what you're supposed to do. But then again, who made the rules and who's saying what you got to do to be profitable? If you're profitable, you're profitable. If you're making money, you're making money. You know, what difference does it make? I'm not going to join the live video next week since I'm traveling. Hope everyone has a good week. Hamed, it's okay. We forgive you. They will be here for you. Those videos will be here for you when you want to watch them. So anyways, guys, Richard, again, thank you so much for the $20. I really appreciate it. You know, we had a good week. Seems like a lot of people here had a good week. If you've learned a lesson, you know, let that carry you through. We're dropping some knowledge today in the video here. So, you know, I'm going to sign off. We got some other things to do. We got, before the weekend comes up. I mean, I definitely appreciate you. Matthew, nice work on staying green. First profitable week for Matthew. If you guys want to show some love for Matthew for having a green week because it's his first time ever, leave a comment. Definitely appreciate you guys. Got me fired up. If you guys watched my video yesterday, I was a little fired up too. So it's been a couple days in the works here. Probably because if I don't live stream every day, we'll start getting a little agitated. So you guys have a great week. Definitely enjoyed you guys hanging out with me. Really appreciate it. Like the video if it's a value to you. If it's not a value to you, dislike the video. You know, whatever. You guys have a great weekend.